Yo, what is up? Check, 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 check. I think we are good. Almost looking like a little potential reversal. Not quite yet. We'll see. It's trying. Anyways, what is happening, guys? Let me move some of the stuff off the screens. I got a couple little trades on, but yeah, not super important. Let's get to it. Ready? Here we go. Let me see if I can share. Am I not sharing the screen? Good night. What ridiculousness. All right. So I'm trying to get the chat up. What is going on? Brant is in. What's happening, man? There it is. Oh, I can do that. Give everybody just a little bit. Got a couple people hopping in. I cannot, if you are on Twitter, I cannot see you. So apologies. It just doesn't work that way as much as I wish it did. It does not. Let me get this screen up over here. Well, I think we're ready. Oh, yeah, the spy. But yeah. What's up, guys? I think it might. I got a little bit left on this SPY. Grab some 405s. I mean 402 puts at like $40. They kind of over doubled. Just a couple runners. So I had some on my other screen here. Watching Nvidia too kind of bounce off this 175. Nice little rejection. Would have been a much better, cleaner trade had I been able to type fast enough to send the 350 exit, but not quite. That's all right. But I think, it's lunch hour. Indices are kind of like chilling out right now. So let's here. If you guys haven't retweeted this or shared it, Apple Weeklies, we can take a look at that. Yeah, if you guys have questions or you have some stuff that you want to take a look at as we go, put the tickers in the chat, and here we go. We can kind of overlay as they go. What I will say is this is earnings season. This week we have like 200. It's like 20% of the S&P 500 actually reporting this week. So what I will do is I will say I'm going to stay away for the most part from anything that actually reports this week. So if we could say SoFi is like through the roof right now. There's a couple trades that we can take advantage of. I don't know if anybody saw the Lucid stuff, but that was a crazy trade. Nick caught that. What's up, man? Excalibur, if you want to hop in, by all means, you should be able to. And once you're up, I can bring you up to the stage. We'll call it the stage. But anyways, so let's get on with it, right? So earnings season is here. If you guys don't know how to trade earnings season, by the way, there is a way. We do teach it. I'm not running the course this quarter, but if you guys want to learn how we do trade earnings, it's with spread trades. If you're not a spread trader, sorry, not much I can do for you there. But if you do, where did my other screen go? I got to keep watching these charts. But if you do spreads, then I will be sending a couple. I do run the course, like I run the system personally, so I'll be taking trades and I can throw them in the server. They're a little bit more nuanced, so it's not going to be something I send to the bot. You'd have to basically understand it. So unless you're in the server, I'm not going to take a whole lot of time explaining that stuff. But anyways, yeah, we have an earnings trading system. It's about like 85% probability win rate, give or take, about 100% average win and about a 30% average loss over the last, I guess, 4 years that I've been doing it. So anyways, let's get into it. We got a couple extra people hopping up. Brandon, I can add you here, or X. You don't have to have video. That's fine. Say what's up. See if I can hear you.
Yo.
There he is.
It works this time.
All good. So let's get into this. So every Monday, what we do, if you're not familiar with us, we will go through and just kind of like develop a little trade plan for the week ahead. We're going to look at a lot of stuff that is, I'll keep this overlay here. We're going to look at a lot of stuff that happened last week that we think is going to be important to remember this coming week. Any of the major economic events coming this week. I'll tell you right now, this is a big freaking week, right? Just not just in terms of earnings, but in terms of economic data. This is Fed week. If you guys didn't know, February 1st is that Fed rate decision. And also we get NFP or non-farm payrolls on the first Friday of every month. So huge, huge freaking week, man. That's all I can say. What does this say? Alex, normally on your position for swing trades, what percent is your percent is kind of arbitrary. I couldn't even say percent. Like if you have $1 million portfolio, and I wanted to put, 1% in, like that's $1,000. Maybe it's not. If you have a $10 million portfolio and I want to put, 1% in, that's a lot of money. So percent is kind of arbitrary. It's more about the dollars. That's all I could really say. Typically, a little bit lighter on swings for the most part, just because you can't really have stop losses, if that makes sense. So day trades, actually, it's probably heavier intraday, just because I can manage them a lot easier. And swing trades, you don't have stops. So, I mean, you do, but what happens when it gaps down or gaps up or goes against you? It's not something that you can actually control. So definitely swing trading got to be a little bit lighter. That's pretty standard, I believe. Or most people will tell you that, at least. So anyways, got to read this quick disclaimer. If you're new to options, please call 1-888-OPTIONS and get a copy of characteristics and risks of standardized options before you start trading, and carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. Cool. As I'm looking at this, looks like our pretty faces are kind of hiding the screen. I want to do a little recap. I don't have any major ones. I'll go into some of the economic data from last week, but a couple of headlines that stood out. Lucid takeover shenanigans. That was wild. If anybody caught that, I know Nick did. A handful of us caught like a Fisker FSR, like sympathy trade. Rivian did a whole like big thing, and a lot of them are reversing today. So it was a nice swing to the short side also. I think that could continue on. So Lucid, rumors of having a takeover bid, and all of its peers kind of shot up with it. So, like Fisker, Rivian, probably not going to be takeover targets. Even if Lucid is, that was just, I really don't think that that's going to, Tommy, I really don't think that that's going to hold. So here, let me just make this a little bit bigger. But things like that are definitely, what's important to note is like headlines like that are definitely flying around. So there's a lot of beaten up stocks. Just be really careful if you're shorting. A quick headline can clearly, push a trade completely against you very fast. So be quick on the triggers for sure. Baidu, it was a ton of chatter about Chat GPT, right? And so I think that that's still kind of like top of mind for a lot of investors. There's still basically appetite to me for some of that growth stuff. So C3 AI, by the way, was like it run quite a bit to me. I come from tech. I come from enterprise tech, and I will tell you that I'm not a fundamentally. It's never really look into it, and you guys will see. It's probably not the best fundamental trade, but could be a nice reversal. Looking at this today, actually setting up pretty nice for a little reversal on C3 AI. But again, those are more like day trades. I think those kind of headlines we want to be aware of this week for sure. And something that you guys, we don't really talk about a whole lot, and we haven't, but it looks like I got a little double hit here. February 5th is actually the date where the EU puts the next phase of sanctions on Russian imports, specifically oil. So that's going to be XCal is too beautiful. Yeah, I know. That's actually going to be a pretty big catalyst. It's not this week, but it comes into next week, and I think that's going to set up pretty well for some potential oil swings, maybe later on down the week. But I want to keep an eye on them this week because the market tends to jump ahead of news as they come out, or in anticipation of them coming out. Brandon, do you have any, or XCal, do you have any other headlines that kind of popped out to you that you want to mention or are worth noting, you think?
No, most of it was that Chat GPT with Nvidia and Google and all them.
Yeah, so like
Microsoft. That was a
Nvidia,
nice
Google,
runoff.
all that kind of stuff. Interesting things, but with this week, Microsoft I think could be playable, although it looks like it's selling off just a little bit right now. Google, again, earnings, anything with earnings imminently coming this week, and I'll pull this earnings whisperer. See if I can get them on a weekly schedule. But anything with earnings coming in this week is going to be juiced in terms of IV, so be very, very cautious about that. So here's what I can see right now. So today, okay, so SoFi already happened. I know one of the guys was looking at SoFi, so that was a huge win, at least from a price action perspective. Saw that thing flying. NXP, Semiconductor, Whirlpool is durable. So there's been a lot of. I'll show you guys it when we get to the economic data. I think Exxon potentially. I would assume Exxon's going to be an IV crusher, so I wouldn't play that personally. UPS tends to have a pairs trade with FedEx. Where's FedEx? FedEx may have already traded, so that I'd take a look at that. Whatever FedEx did, UPS would be a little bit of a muted category, assuming FedEx went first. Otherwise, FedEx could be a good pairs trade if they haven't gone yet. GM, Ford pairs trade. These are easy. I'm talking about pairs trades right now just because you don't have to deal with a lot of the IV crush that's going to hit you, from if you're trading the actual underlying. Very different. Caterpillar, Deere. I think Spotify is not liquid enough. And make sure if you're trading any of this stuff that you're checking for liquidity on option contracts. I would not touch anything with anything larger than a 10% bid ask spread. So if the ask is 100 and the bid is 90, that's 10% difference that's the max I would ever do. AMD, Snap are both going to be interesting. Both big movers. Snap especially, typically pretty inexpensive though right now. So we'll see. That's going to be a funky one. Merck short ads. Nice. McDonald's. Man, McDonald's is like 52-week highs too, huh? That might be. I don't know that I want to play McDonald's. Well, I will be modeling a lot of these in the server. And if you guys have questions about it, you can at me in your servers and I'll see what I can do. And then every day towards the end of the day, I'll try to put out like this is the implied move. This is the historical move. And that's really what you want to compare it to. So if you're looking at trades, implied move being significantly higher than historical moves, typically volatility crushers, and you do not want to be long options. Facebook, Meta on Wednesday after the close. And Amazon, Apple, Alphabet, 1, 2, 3. Wow, Thursday, back half of Thursday is huge day. 1, 2, 3. Starbucks also, Qualcomm, Ford. These are all big, giant companies. So Merck before the open on Thursday, we want to be careful about that trade right there. So we'll have to spread something off on Merck. We'll see. Oh, Peloton. That would be one that'd be really interesting. Peloton and Snap would be like my interesting straddles for sure. They're so cheap too. But other than that, I think those are most of the big ones. I don't see just Nvidia potential pairs trade against AMD. It's a little bit more expensive. We'll have to check the volatility. Chubb is actually insurance company, so I don't know if anybody watches that. That's it's one to watch for the sector. Waste management stable, Altria stable. Yeah. I think the big ones, Meta, typically a straddle candidate, believe it or not. Amazon, straddle candidate. Apple, very I'd say like 7 out of 10 times this is an IV crusher. I would not play Apple with long options or Alphabet really. Yeah, I'll model all these. GE Healthcare. If anybody still has this GE trade on GE Healthcare reports, I did not check that. Check that. Let me see. GEHC. Man, that GE trade has been such a huge win too. Oh, 74. Nice. Hopefully you guys still have a little bit of that. Was not expecting to see that kind of a surprise. Very cool. Very cool. All right, so I'm going to move this stuff over. Indices still chopping. We're not missing anything right now. Okay, so really quick recap on economic data from last week. So PMI composite, so S&P Global Composite PMI, if you guys don't know, this is just like expansion, contraction. Anything under 50, we're in a contraction mode. So basically our output still declining. Crude oil stock change. I put this here just because we're going to be watching that Russian sanction thing coming out later. So this is where we are, I believe, on our reserves. GDP growth rate. This was the big one. I was kind of worried. Like the consensus for the Q4 GDP growth rate was like, I thought pretty high, 2.6. We came in at 2.9. So this whole recession thing, it would have been that 2 back-to-back quarters of negative GDP growth rate. Now we're the third quarter in and it's looking pretty positive. So that's a tough one. Durable goods orders. This is that Whirlpool type of stuff. So, retail sales, but like things that last forever. My mouse. So the biggest ones of last week. So core PCE. So PCE, if you don't know, this is actually the Fed's main gauge. It's not CPI. It's not PPI or any of that kind of stuff. It's actually PCE. So it's what we're spending as consumers. So remember, inflation is controlled really by the velocity of dollars or how much we're spending. If you own a business and people are buying your things, you're not having sales. You're probably raising prices. You're doing perfectly fine. So that's our spending. So are we still spending? And right now we're spending, but not like it could be a whole lot worse. Month over month came in exactly in line. So we saw the trend kind of continue. Nice little earnings run up. And I think a lot of that is starting to cool off today. So year over year, we're at 5%. And then the last one is consumer sentiment, which was surprisingly like good. So what I'll say is, like, as we look into the markets, which is the next slide, next thing I'll pull up here, the bond market says one thing and the equity market is currently saying something totally different, right? And then the Fed is saying a third thing, actually. So the bond market right now, what's weird, rates are going down, but the Fed is saying, hey, we're going to be considerably higher for longer. And the bond market's basically saying, yeah, I don't believe you, dude, which is a little crazy to me, right? And then we're seeing some of that rebound kind of manifest itself in some of the stocks and equities. But this week, I am a little cautious, specifically on some of the metals trades, actually. I'm watching the dollar. So DXY is going to be one of the main charts that we pull up. Actually, let's do one more quick one. So moving into this coming week, right? Here's the deal. So today, tomorrow, we don't have a whole lot of stuff, right? We have consumer confidence tomorrow, kind of like consumer sentiment, but really it's not till tomorrow PM that we get some major headline earnings. And then right out of the gate, Wednesday morning, we get the major FOMC rate decision. So even some of the earnings trades might be impacted based on this. Any gains that you see early on might be completely pulled back, or they might be exaggerated, because right now the market's pricing in about 25 basis points for the next 3 meetings, which I think is about right. None of that in the actual rate. I don't think that that's going to be any different than what we actually get. But what's going to be important is the speech. So it's all going to be about, and if you're watching this as it goes, it's all going to be about really like, what does the foreseeable future look like? The market's currently pricing in that we're going to have rate cuts in the back half of the year. And the Fed is saying, no, we're going to stop at 75 more basis points, so 25, 25, 25, and we're just going to see how it goes. And the market, and the bond market specifically, is saying, well, no, I think you're going to end up reversing all of that, sooner than later. And that's what the question's going to be. Like, what does the commentary sound like from the Fed in terms of further hikes? They're going to talk about terminal rates, or is like, what's the end rate that we're going to get to? Remember, we want to get to neutral was the initial goal. So neutral being whatever inflation is, that's what you want the Fed funds rate to be. So if we're thinking 5% inflation, 5% rates, that's about what it's targeting. We also get JOLTS and ADP. I don't think that ADP is going to really be a big thing. Jobless claims, factory orders on Thursday. Again, not really market moving. So whatever happens after this FOMC speech, that looks like it should continue on through Thursday. And then Friday, we get non-farm payrolls, which could completely reverse the whole thing depending on what happens, right? So NFP, non-farm payrolls, typically the most important economic number of the month, of every month, will tend to determine the way, at least the way that the market digests that number over the following week. So next week, that will likely determine the outcome of February. And I didn't have this prepared to it, but I do want to show this because we've had a really good run recently, and I mean clearly like a really good run. But one of the guys that is in our group was asking me, "Hey, I heard February is not that great of a week typically," and I was like, "Well, it kind of depends on January." But then I pulled the data, and you know what? He's pretty spot on. So this was a chart that I had just reference stuff. So last 100 years, last 50 years, last 20 years, different colors, right? January, February, March, April, May, blah, 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 right? We knew that September is historically the most bloody month of the year, right? And February, though, oddly, it's either flat to slightly down. So I think depending on how much we run, into February, it'll probably be most of that will probably be probably show up after this FOMC rate decision and the commentary that comes after that, and then Friday's NFP. So all that said, I'm still on the camp of I don't know if you guys remember this. This is where we are in terms of presidential elections, right? Like this is kind of like September midterm election cycle that was likely, to me, the bottom. So the dips are still buyable regardless. I mean, the indices have been strong, so you really can't fight that. All right, so let's move into the charts. First look, as always, is going to be major indices. So I got SPY, Qs, Diamonds, Russell, right, mid caps, Dixie, Gold, VIX. We'll put VIX over here, and let's look at TLT. Right. So TLT maybe remember inverse to the yield. So on the charts, and I'm going to move this to a 30-minute chart. So apologize also, by the way, I don't have, I haven't deleted a bunch of these lines here. So one thing to note, like we still have this little fair value gap that's way down at 391. That was, to me, the major thing. If something crazy happens, with speech commentary and NFP, today's weekly or this week's weekly range, that's what this orange box is. That weekly range could put us in range to hit that fair value gap right around 391. So just as a side note, on a downside target, if the whole week completely flips ugly, right, this would be the target towards the back half of the week. And maybe just if you're trading some of those FOMC events. On the upside, we have a fair value gap. I still have one at 417. I don't know, X, do you have one higher on
No.
S? Well, I know you trade ES, so it might not show up the same way. But an average week's range would take us right to the top, just slightly higher, 417. And if you guys remember, 420 is a major level for SPY in general. But that's where it would take us, right around to that. Probably tag that. Man, can you believe we're talking about SPY at 420? It could legit take us to hit that little level. But at that point, it's just the most massive resistance ever. Like that's going to be for sure. Currently, we're sitting on a 20-week moving average, so that's going to hold us up for a little bit. 200-day moving average sitting at 395, 394 and change right now on SPY SPY. So, but what's true is that right now we're still in this kind of consolidation zone. So that's what this was right here. Drag it all the way over. We're still right into that. So unless we break through and break yesterday's high, like 407, it's going to be a little bit tough. I just think it's going to have to be the FOM speech that brings us higher. Otherwise, barring any real news, I have a feeling that this is going to be very choppy, trendless trade until we get to Wednesday, and then it's just going to be like explosion in our face, and it's going to be glaringly obvious whatever direction this ends up taking. Just doing a quick check-in on SPY in the markets. Looks like we're taking a little downturn. Ooh, tag that 402 a couple times this morning. I don't think it's going to hold this time if it continues with this momentum. You seeing this? Yeah. So right now, if you're in trades, this is pre-market levels right here. This would have to hold, but it does not look like it's going to. This was our pre-market 1-2. Yeah. If this breaks here, ooh, yeah, she go. Stops triggered. Stop, limit, sell. Who knows? Yeah, 401, 43 would be the next stop. That's that pre-market low right there, assuming that we can get through these guys. And then 400, 200 week at 401. Choppy though, man. Not looking fun. Unless we're above 403, I just don't see it going any higher. We filled this fair value gap here, right? Did you catch this trade this morning, X? That was a clean one. And if anybody was wondering how we got the 402, it was just targeting this lower level, and then trigger was at that 405 fair value gap or actual gap fill right there, rejecting. All right, so those are the levels on SPY. How you use them is up to you. If you like to sell credit spreads, I'd be selling that 390 below, kind of put credit spread, and yeah, condors below 390, above 420 should be a gimme, actually. All right, cool. So that's SPY. Do you guys want to take a look at the keys? We want to look at gold and silver. Cool. 52-week high. FWM. I don't know what FWN is, Brent. Merck, J&J. News. All right. Got a little bit of lists. This is the one I want to pull up really quick, though. This is the Dixie, right? So remember, gold, metals, all that stuff, very, very tied into the dollar, pretty much inverse the dollar. A couple of times we've seen gold go up and the dollar go up, DXY, the dollar index go up. But it's a rare thing. If we're lucky, we see that again. That's super bullish. But for right now, this is a pretty heavy basing kind of level. For me, the Dixie over 102.20. That's going to be this level right here. It looks like it's going to try. That's going to be bearish generally against the indices. So I'm using the Dixie right now as my broader market gauge rather than the VIX. You guys pull up on the YouTube. The VIX is, I just not trustworthy for me right now. But the Dixie over 102.20, I think that kind of runs a little bit hotter, and metals, equities, all of that kind of stuff is going to be kind of caught in its own way. Also, by the way, historically, this week, the week that Amazon, Google, Facebook, and usually like Microsoft all report together, historically is also a slightly down week as well, if you didn't know that. So interesting fun fact. Qs right now sitting at the 200-day moving average. So rejecting, pretty typical trading here. Whenever we get near that 200-day, that's that red line, you'll see some kind of chop. Let me see if I can, double top. And then as it's moving away, you get that momentum building up. Let's see if I can find one. God, it's so long ago when it was below crossing above. There you go. Even coming above it, it'll be choppy and then bounce off. No matter what chart you're looking at, they're all going to chop around that. And that's the 200-day locked on the daily, not on the chart, specifically time frame stuck on the day. All right, so chop ensues. That's what I see. Dixie 102.20, you got your levels there. Gold GLD, this is the tough one, right? So huge run lately. As much of a fan I am of this trade, I'm not so sure I want to be long right now. This could be a decent short, but at the very least, it's going to be, sell the calls if the dollar does break through that level. So selling some upside 180 calls, it's going to be a huge level. It's having a hard time, but it needs, such a massive level. So a pullback is definitely within, reason anyways. And even any pullback above 170 is going to be pretty bullish. Just a basic. Let me just take a fib retracement here. Not that I think it's going to get this far, but 50% pullback would bring it to 165. I don't think we get that far. Realistically, 172.50, something like that would be my target, right around this kind of prior consolidation, just under 175. So that's me. I do have silver, so let's take a look at silver. SLV ETF. This one high and tight though, so hopefully could potentially buck the trend. We'll see. This one has not pulled back really like at all compared to gold. Both on super heavy watch though. Oh god, gold short term looks like a short, man. All right, if we want to look at VIX, we can. Let's do this. So instead of TLT, let's do US 02. 2-year yield. All right, so the 2-year yield. So if they're targeting 5% terminal rate, that would put the 2-year, this guy, right around 5%, which is like it peaked at 4.82. Right now, this is what I'm saying. The bond market is saying, no, we don't believe you, Fed. We think you're going to have to lower rates. So what's odd about this is that it's not. I mean, it's been going down. So to me, this one, any of these bets, I think the 2-year could go up, which would be potentially move that Dixie trade and potential bearish on the assets or risk assets, let's call it. All right, so that's what I have for the major ones. If you guys want to do, I think diamonds still, by the way, are the strongest of the bunch. Again, sorry for all these lines and things, but yeah, this is going to be that level. Diamonds to me, 335. I'd want to see this kind of defended. So as long as DIA stays above 335, I could still say bullish for the general market. I don't think we need to have this major range. And I'm looking at this one more so than SPY, by the way. I just think that's been the most strong one. Other than that, this is the level. So 400 basically on SPY. Do you have any major levels on ES, Brennan? Actually, you could probably share your screen too if you want. Going once, going twice.
Hold on 1 second.
Man, VIX 19. Telling you gold looks like a short. What's GDX doing right now? Well, he's looking that. Let's look at the subsectors. So subsectors is another one. LabU, by the way, was like on a major tear, but kind of just stalled out. This is XBI or biotech leverage. Still decent level. Could pull back, but I want to watch this one. If XBI or the biotech sector does catch a bid, like meaning like if it does start to go up, that would be like my risk on sentiment. So watching biotech as a sector right now. SMH, I know a lot of people watching this sector kind of bounced. So here was the major resistance, right? 235 on the semis as a sector, broke through, coming back down to retest it, or at basically a very critical level. So I think AMD is gonna determine that. If it's a short, it'll look like this, probably targeting that 200-day, but it would be below 235 after a break through 235. Actually, I'd like to see it break through 230, breaking this level first. So I'd like to see it break that level first and then take a short on a lower high below 234 and change, something like that. So must break first and then take short on lower high. That's semis for me. Otherwise, I'm just going to stay away. AMD can change that whole chart. UNG, man. Anybody know what happened in that gas this morning? Jeez. I was thinking it might be time to take a shot, but this thing just fell out one more time. I really don't even know what to do with this anymore. It's like it just keeps going and going. 240, I suppose. This is NG, like nat gas futures, by the way. 248. I mean, it's getting close. Felt like a little bit of a fleshy event this morning, so We'll see. Daily looks like there could still be some more downside, though. I can't believe it. Oy, not breaking structure. GDX gold miners probably going to take a breather. OIH, oddly enough, the strongest of the strong sectors for me. Unfortunately, I don't have that much of it, but we're still breaking out. So this is what I like to see from a breakout perspective. So 322 was that major resistance, broke through, put in higher lows, coming back again, and this morning retesting that 323 level and heading to the upside, at least looking like it so far. This chart, by the way, super bullish long term. I mean, this is nasty, but yeah, a lot of room. This is a huge level. Above this, I mean, we could just skyrocket. This is your SLB, Halliburton. Holy what? High and tight, Schlumberger, Halliburton. Very similar. Ooh, very, very high and tight breakout little formation. All right, X, you ready or no?
Yeah, sure.
You are?
Yeah, my screen shared.
All right, there you go.
Yeah.
Cool.
So, well, this is.
Yeah.
So basically,
So
I
ES
mean,
for levels.
it's the upside. Definitely watching. If we're able to push, it's 4,200. Was nice support resistance, but I think what we probably do is take out that wick. I think it was a CPI.
Yep.
Right here, looking to complete wick. But overall, I mean, pretty typical triangle breakout with a double retest of 4K and just a slow melt up.
Slow melt up. What
It's
you got for like major support level that you're looking at?
Just on this daily, these two kind of dojis. We kind of came down to it today, kind of pushed up, but it's coming down to earnings and FOMC, like flip coin kind of thing.
Yeah.
So I'm just playing it day by day. Earnings season is my least favorite of all.
Yeah, it gets pretty choppy typically around earnings season. I'm trying to look at your levels. What's the bottom level? 4,000 on ES.
Yeah, 4,000. This is a pretty big daily demand. I mean, we haven't taken out. Well, today we haven't even taken out overnight highs or lows, so we're still waiting on that to see even direction of today.
I got like 3,996 and change. Yeah, there's a bunch of wicks right around that level.
The NQ I think shows it a little bit better, and I don't have as many lines. Take that off. But I mean, we're smack dab. 200 points right here. 12.2 was rejected. 12.1 during the day. 12,000 big one. And then we're kind of at the top of that broadening range.
I didn't even catch that.
Yeah. So I mean, we kind of came up to the top of it.
So if we reverse, what I'm hearing you say is like that's going to be a juicy trade potentially. What is that target on NQ to the downside? Oh God, 17 and change.
Yeah, this 11.7 is a huge level. If even going back.
Yeah.
Playing 11.7 breaks and bounces off it and pretty solid. So of course, I'm looking for a pullback. I thought this month would be red, but obviously not.
We'll see.
Yeah.
It's not technically over yet. All right. I'm going to take this one back.
Okay.
Let's do this. So we got a couple guys asking. All right. So J&J, we can take a look. Let me do this. So when I look at a chart, by the way, it's multiple time frames. So I'll have my setup here is going to be weekly, daily, hourly, and then for like a 15-minute for a really long view just to see 15 or 30 up here is fine. So J&J is the ticker. Bro, what was the news on this? Change of Third Circuit's ruling. So they had some lawsuit stuff. Man, this just goes lawsuit stuff just destroys the stock, even the ones that you think are safe. All right, well, this guy's kind of toasted just because that's going to change a lot of fundamentals. Yeah, you're nearing this bottom here. I can't really do this one. That's going to be catalyst driven. We got to let the market kind of like chop that out and see how that goes. Merck. All right. Yeah. So Merck, I have a short on right now. So I didn't realize like the contracts I have will capture earnings. They report soon, like this week. So I got to do something with this sooner than later. It's got to be spread off, but really what I was looking at on Merck, and we'll just look at it here. So on an hourly, so the initial trade was short here, somewhere around here, came back, retested, and now we're retesting this lower end again of a different consolidation range, right? So it's still in this downtrend, but again with earnings on deck. So this is Thursday. We're gonna have to do something sooner than later. Definitely gonna need to spread this off. I just didn't realize how soon the earnings were actually coming. I'm just gonna grab a little channel. Yeah, might just be a hard close over 106.50, just to let this play out and then mess with the IV stuff later on. But again, comms were not that expensive. Let me take a look. These didn't feel that expensive. Yeah, 39 percentile. It's not horrible, but we know that that's going to be building as we come into this. But yeah, rejection below 106. You could trade this as a day trade for sure. Targets on this guy still down to one, just over 100. I have no idea what FWN is, Brent. FWN. Yeah, that's not what that's definitely not what you're looking for. WM. Yeah, I don't know. It's 5420. Oh, you GDX D. Oh, GDX D. I don't know that I want to go fully inverse miners. I guess you could as a hedge. So this 3x inverse GDX, the ETF. I just like, so if oil does go up and gold goes down at the same time, that's not going to be good for gold miners. So yeah, in that event, we could do with that one. Tesla, yeah, good job. That's one we should look at. So Tesla had a short trade on this morning. This is the 200-week moving average, this purple line. So to me, that's the one that stopped this trade. It could continue. Right now, we have this pre-market kind of consolidation right here that we're still like firmly below. One of the things this right here was earnings, and I was watching this as it was trading, and during the earnings call, I don't remember what they said. It was basically like the concern was diminishing margins for Tesla across like in the foreseeable future, and basically Elon just directly addressed it and said, no, I think margins will be higher, in 2024, and that just took it. I mean, it just went off. And on top of that, like during the call, he was talking about new products, so new lines of revenue. If I can like compare like a Tesla to an Amazon or a Microsoft, I mean, Microsoft's metrics decelerating quarter over quarter consecutively, not really opening new lines of business, at least not anything, of note. But Tesla, insurance, like energy, all that kind of stuff, still accelerating. So, and even like R&D, I think that was the biggest one for me. It was like 1.9 billion or just over $1 billion of R&D. And I look at like Amazon was like $22 billion of R&D. So Tesla's doing a good job cutting costs. I just think that this was a big move in a very short period of time. As for right now, that 200-week moving average is defending the stock. So if it does break below this 200-week moving average, then yeah, we should go straight below 160. 160 is going to be that major mental level for most people that are Tesla share owners. And 175 right here is what we're running into. So if you look at this as a weekly chart, so prior support 1, 2, right here, this is that level. 175 really is what we're just running into. So major overhead supply after a huge run up. I would expect this to pull back, and I would expect it to pull back likely around that 147 sometime in the next 2 weeks if it does lose that 200-week moving average. So that's what I would trade. I think that's a clean trade for a swing, or you can day trade little bits and pieces of it as it goes. from here, 165. So what I do is I'd probably take this level right there. It's the bottom of that candle. I'll sync it, take a look at it on the daily. Where does that land you? On the daily, 165.75. So if we get a clean, full hour candle below that, I think it's a go. Really, it would just be a go, because that lines up to that 200-week moving average. Go to the short side and targeting that fair value gap at 147.84 short term. Other than that, I wouldn't plan further than that, because it's Tesla. You never know what's going to happen. I think let's do one more. I think is going to be tradable this week. So Microsoft already reported earnings. So big beat and skeet is what we call this, right? So the big beat, right? Or Microsoft, I think a lot of people tend to view Microsoft as one that has a report and then runs up, but it kind of did. And right now we're testing that level. So 242 is exactly where it closed the day before that it reported earnings. So this to me is going to be that major line in the sand. I mean, hard line in the sand right here. So if you can see this massive candle, let's take the bottom of that. And right here, I'm going to call this the price of interest here. And then here, this would be a short entry, but it looks like this. So Microsoft, for now, you could trade down to that 240 level. I think is more or less clean. Oh, you're right there. I mean, it would have been a nice short earlier, but as it approaches 240, it could get to be a really flushy situation. If it does happen to flush below that 240 and you see this little break below 238, this probably wouldn't be today, probably later, right? I could see this kind of swing. 219 seems a little aggressive. Let's see. Targets the short side, 230, right? So I'm going to take this consolidation here. So support, buying pressure, buyers coming in. Yeah, pretty decent. So if this does fail below that 240 level and you start to see that momentum build, it could quickly move to that 230. That's what I'm looking at on Microsoft. 200-day array way up here. High, lower high. A full-blown change of structure would be below that 230 and your 200-week at 225. Crazy. At least Microsoft's going to be tradable this week. That's for sure. I think gold we looked at, silver we're good. TLT, you want to take a look at TLT? So TLT is kind of basing right now. I don't think it's ready. This is what we call like the long bond. I think this is going to be sideways really till FOMC speech, but this would be something that we could trade. It'll have a trend after the speech, but for right now, it's kind of sideways. I would wait on that till we get a cleaner direction. Yeah, break above 110 would be good, and then start looking for longer longs. Anyways, I think what is this? Carnival? Are you CCL or Carvana?
Carvana CVNA. They got halted today.
Oh, nice. Yeah, Carvana is one of those that's like major. I mean, just like crazy one. Did you see there was like I forgot who the airline was this morning, but some European airline was on CNBC this morning. It was like huge beat. Interesting. We wonder. Not having the same effect on ours. I think Boeing, by the way, potential just like Iron Condor. I think this guy's gonna be trapped for a while. Possibly a pullback. This one would be a little vulnerable if the indices do pull back, just because it's also had a huge run.
It's a new low on the market.
Ooh. My 402s are still alive. Look at that. Tesla. I just her. Oh, it's so close. Okay, I mean that Tesla rejection looks clean. it's just a question of how much further is it going to go. So it should come back. It should come back to 160 change, just under 170. See how it acts. This is a nice short developing though. Clean rejection right off that pre-market high. Should we add? We'll see. Would have been nice ads on those 160s for 180. I was looking at the 160, but the contracts are crazy expensive on Tesla this morning. This is a Monday effect for sure. But 160, I mean, you guys know 160 is the first target for sure. And then if it fails 160, we got those lower targets. So that's potential swing. No doubt. Yeah, new low on SPY. All right, guys, let's get to it. I got some trades coming up. Got some stuff on the back half. I think this week we have a full schedule. By the way, we're going to do a space on Wednesday. So XCal's going to be there. The whole crew's going to be there. Let me check Wolf's spaces really quick. If you guys aren't following Wolf too, financial, that is. He's on the space right now. I missed him this morning. I don't do the Monday mornings with him, but we got Tuesday morning, Power Hour live on Spaces. Let's see, Wednesday, we're going to host. Looks like you got a Tuesday Power also. Are we doing? Ooh, 5. These are my favorite ones. Mondays at 5 p.m. Eastern. I don't know that they're that popular, but this is the stock market picking and sentiment. Always a lot of really good commentary from a lot of guys and some like really killer picks too for swing trades, equity swing trades. Yeah, 8 o'clock Wednesday is just kind of like midweek check-in. And wow, we're full calendar. Thursday morning live and Friday morning with Sim and Vegas. Completely packed schedule. Look at that. Ace is in with us on Wednesday too. Cool. All right, guys. That's it for now. Interesting setups. I'm kind of excited. I want to get back into the market here. We got some trades happening. Cool. All right. That's it for me. Appreciate you guys. Jesse says he misses us. He won't be there. He will not be there on Wednesday. He's on vacation. So have fun, dude. See ya. Any thoughts on Sark? Oh, you guys are okay. Let me do this. We got a couple. Quick minute. Shopify had a huge run up. Ooh. When did they report? Shop earnings. I think this is, you got to give Shopify just a little bit. It's run into like right here, $50. I mean, that's a huge run. I would not be pressing like anything that's run 30+% into this week. Definitely not. I wouldn't necessarily be looking for that to go short either, unless it breaks below 47.50. Here's your short level, right here. It just tagged it, so it's not quite ready. And on these, I'm be super patient, so I'd be looking for something more along the lines of a like break here. These are your two trading zones. I mean, that's 147. That's $1. But the big trade wouldn't be until this breaks, and then you could take for this fair value gap. That would be way down here. It'd have to look like this. You can't shoot for that just yet though. Not ready, but there's a clean fair value gap on shop. Looks like to 44, 43 and change. Something like that. I do want to check it on Rivian. Oh, this one got that pump from Lucid. All of that. Totally gave it back. Kind of basing. Nice short this morning. Looks like trade's about over, unless it breaks below 18. That'll be a new one. Sark. I mean, Sark, so you have to look at ARC. I can't look at leverage. Like these leverage stuff. Yeah, TSLQ, TSLL, all that kind of stuff. I just, they're daily inverses, and they just don't trade right. ARC just tagged that 200-day. Even this, it's hard to chart just ARK. It's hard to trust levels that I put out on ARK just because I know what it's made of. So it'd be like that Tesla. Like if Tesla goes south, yeah, SARK. I'm with that for sure because it's such a huge component of ARK. But those are the things I would be looking for. So like if it's an ETF, like if it's a major, if the ETF or right, if the ETF itself is kind of like pulling back and you know that, hey, this is the biggest component of that, then I'd look for like, it would give me a little bit more confidence to take like a Tesla short if ARK was completely falling out, just because I know that, hey, it's such a big weighting. Same thing for like Qs too, big weighting in the Qs for Tesla. So we'll see, man, coming up on this 401 level. It's just fighting. Dixie pressing. Tier climbing. Not looking good. But for now, as long as it's holding over that, it'd be somewhat bullish on my equity positions. All right, guys. Went a little bit long. We'll catch you on the next one. I'll see you guys out there. And